Good day, subscribers! Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we are doing episode 2 of Is It a Buy? And we are doing Twitter stock. Twitter was the winner from last week. That was the name that got picked out of the hat. Quite a few of you guys actually suggested Twitter. I believe that was the most suggested one. So it happens that it ended up being the winner. So congratulations. Now for next week, don't forget to leave your comments in the comments section for what stock you want to see. So hopefully next week you can be the one that's picked and I can read off your stock and we can see, is it a buy? And last thing is, I am thinking about I'm almost for sure I'm going to make this series into an every week series. I was talking about maybe doing it every other week. I wasn't really sure. Last video did pretty good. It did over 400 views in the first week, so obviously you guys liked it. So if this one does over 500 views by the end of this week, over the next 7 days essentially, then I will absolutely make this into an every week series because that shows that you guys are very interested in it. And if a video gets over 500 views in a week for this channel, that's a good, successful video in my opinion. So, is Twitter a buy? Let's go ahead and jump right into this. We all know what Twitter is. Well, unless you're under a rock, you probably don't know what Twitter is. But let's assume you do not. So let's go ahead and on your screen, you should see Twitter. We are on a 10K, an annual report for Twitter right now. That's what we are looking at. And we're looking at actually page 1, the first main page of the Twitter 10K. And you can find that on Twitter Investor Relations, or if you're looking at any future companies, just go to their Investor Relations page. So this is how Twitter describes their business. Twitter gives everyone the power to create and share ideas in an informative instantly without barriers. Our service is live commentary, live connections, live conversations. Whether it is breaking news, entertainment, sports, or everyday topics, hearing about and watching a live event unfold is the fastest way to understand the power of Twitter. Twitter has always been considered a second screen for what is happening in the world. Second screen meaning like, okay, TV is supposed to be your first screen, your iPad or your iPhone is your second screen, or whatever type of tablet you have or phone you have, for what is happening in the world. And we believe we can become the first screen for everything that is happening now. And by doing so, we believe we can build the planet's largest daily connected audience. So that's a pretty dang big ambition Twitter has. They want to be the largest platform out there as far as if you want to find out about news story, if you're trying to find out anything that's happening right now, you go to Twitter first and foremost over everything, over turning on your TV, over going to Facebook, over to going to Snapchat, over going to anything else. Other than going to websites, you go to Twitter first. That's their ambitions. Will they achieve it? We shall see. Let's go ahead now. Let's go down to the very last paragraph I want to read. It talks a bit about Periscope and Vine. I just want to look at this for a minute. Our mobile application, those are two companies I believe they bought, Periscope and Vine. Our mobile application, Periscope, lets anyone broadcast and watch live video with others. We recently added the ability to broadcast from a GoPro camera and watch any broadcast live from a tweet. Now, I'm a GoPro investor. I don't know if this is going to help GoPro that much. I don't know if it's going to help Twitter that much. I don't know if this is going to be a big thing or not. They talk about live as the future and doing live videos and those kinds of things. I don't know because, okay, you go live. Okay, YouTube, the internet itself. What is the biggest thing about it? Well, that you can go on demand and watch something. You can go on demand, and when you want to watch something, when you want to watch a financial education, you choose to do it. It's not like I'm like, oh, you got to watch this time period. I'm going to be on at 8 o'clock, and if you don't watch it, you're screwed. No, you can watch whenever you want. That's like the big advantage of the internet. So when you go live, then you're kind of becoming like a TV. I'm looking up there because I have a flat screen up there. So you're going to like being like a TV at that point. So I don't know. Will this be huge? I don't know. There's a lot of talk about live as the future of, these internet applications, Facebook and Twitter and all these different platforms. We shall see as time goes on. Let's go ahead and look at this next page on your screen now. I'm going to read this first paragraph. Now we are in the risk factor section. The risk factor section is, I would say, the second most important section of the entire 10K to read through. So let's go ahead and look at that first paragraph here. We have incurred significant operating losses in the past, and we may not be able to achieve or substantially maintain profitability. Subsequently, I'm sorry, I have trouble reading sometimes. Subsequently maintain profitability. Since our inception, we have incurred significant operating losses. As of December 31st, 2015, we have an accumulated deficit of over $2 billion. Although our revenue has grown rapidly, increasing from 28 million in 2010 to 2.2 billion in 2015, let's just take a moment and recognize the ridiculous growth in revenue this company has had. In 5 years, they grew from $28 million to $2.2 billion. That is ridiculous. That's ridiculous growth. Unbelievable. Unbelievable. But at the same time, we're not judging it off the past. We're judging it off the future because we want to know if this stock is a buy. So let's go ahead and get it back into this. We expect, picking up where I left off in the paragraph, we expect that our revenue growth rate will slow in the future as a result of a variety of factors, including the decline in the growth rate of our user base. That's not so good. We believe that our future revenue growth will depend on, and among other factors, our ability to attract new users, increase user engagement and ad engagement, increase our brand awareness, compete effectively, maximize our sales efforts, demonstrate a positive return on investments for advertisers, successfully develop new products and services, and expand internationally. Okay, so they're talking about they've seen a decline in users. So at some point, we're going to have to look at that. We're going to see, what is this, decline in the growth of users? What is this all about? So at some point, we're going to have to look at that during the course of this video and see what are they talking about there. That's kind of a little scary. We'll go on. Okay, next page up. So this risk factor actually pointing out, we're looking at the bottom half of this page, the part that says spam could diminish the user experience on our platforms, which could damage our reputation and deter our current and potential users from using our products and services. This one I highlighted because I've seen this on Twitter. Okay, so after GoPro's release, as many of you guys may know, I'm a GoPro investor. So after GoPro's release, I want to see, what people were writing about it on Twitter and things like that after they released their new products. So I typed in hashtag GoPro and I typed in latest tweets. I went to the latest tweets part of it. And there were some tweets about the products, but 90% of the tweets were naked women and trying to say, hey, come watch me on the webcam at such and such time. Hey, I'm going to take it all off at this time. I'm like, what? What is this? It's just a bunch of porn on the hashtag GoPro thing. And I'm assuming that's like that for a lot of products and a lot of big companies. And that's just spam. That shouldn't even be on there. And the fact that all this crap was getting through shows that Twitter is not good at managing their spam. It's very bad at managing their spam. I would say Facebook's got I don't know how Facebook does it, but Facebook is very good about it. Facebook does have some spam, absolutely. But they have ways where it's limited way less. The amount of spam I've seen on Twitter, which I haven't been using for long, maybe a month, it's been incredible. So I do believe that is a big risk factor. That if spam just begins to really take over Twitter, it's not going to be good for them. Let's go on. Next page up, we have a big article, and I think this is important. Twitter gets NFL Thursday night games for a bargain price. Company is said to pay around $10 million for 10 live stream games. The NFL said, we did not take the highest bidder to the table. This is big. The NFL decided Twitter's important enough that they didn't want to necessarily take the highest bidder. They felt like Twitter was the best way to get out there to new consumers or possibly people that will watch the NFL and whatnot and get the conversation going about the NFL. NFL chose them, despite them not being the highest bidder. So the NFL is a pretty freaking good run organization, and they are very smart over there. The fact that they thought Twitter was the one to choose to broadcast these games. And the fact that Twitter only paid basically $1 million a game to broadcast, I would say that's a success for Twitter in two ways there. One, they paid crap for getting the NFL to only pay $1 million for a Thursday night primetime game. That's a good damn deal in my opinion. Two, that the NFL had enough confidence that Twitter's the way to go. That's big, guys. That's really big. So this is definitely something I'm like, wow, Twitter, good looking. Let's go on to the next page. This is recent news. Twitter and Salesforce.com remain in deal talks, sources. Twitter and Salesforce continue to discuss a possible deal, sources told CNBC on Tuesday, which was yesterday, by the way, just so you guys know. This video is going to be posted on Wednesday, October 12th. So this is on October 11th. They were talking about this. So last week, Salesforce CEO Mark Benioff told CNBC the social media platform has challenges and called Twitter CEO Jack Dorsey a good friend. Benioff did not indicate whether they're interested in buying the company. So Twitter is possibly an acquisition target. There was talk about Google and a few other places. First off, in my opinion, Google should absolutely acquire Twitter. In my opinion, that is the best way, that's the best acquisition I could see Google doing right now. I think it would be great for Google, Twitter because they would get bought out and get a premium price and the shareholders would be happy. But I think it would be great for Google because Google has the ad platform that they could integrate like nothing and just get tons of revenue from Twitter. And I think it would go good. Twitter with YouTube, they already kind of work good together. And I think they could do a lot more things working together where it could even build YouTube's platforms bigger and Twitter's platform bigger. I think that would be the one that made the most sense, but there's talk that Google actually dropped out. And now the only major suitor in there is Salesforce.com. Of course, these are all rumors. These are all he said, she said, can't mention names type things that is in the media right now. But the bottom line is Twitter is a possible acquisition target. So that means there is a lot of potential for the stock to go up substantially if they are acquired. Possible. Next page up, we have, this page is basically showing that they went public. They went public in 2013, November 2013, so it's been almost 3 years. They've been a public company now, almost 3 years. The 7-year-old social network started offering shares on the New York Stock Exchange at 10:50 a.m. on Thursday, the most anticipated tech IPO since Facebook in 2012. The company, which set the IPO price at $26, saw the opening price go for $45 a share. Talk about investor interest in the company in 2013. They were IPO pricing at 26 and it opens at 45? Are you freaking kidding me? Holy smokes. That is a crazy pop right there. What an IPO if you got in at the very beginning there. Holy smokes. And then you sold out right away, obviously, because Twitter stock price is like $18 or $19 or something like that now. But holy smokes, unbelievable. So obviously we've seen Twitter stock prices down substantially since the IPO. Next page up, this is the page we were talking about looking at. Number of monthly active Twitter users worldwide from first quarter 2010 to second quarter 2016. Huge growth, obviously. But look at right around, it looks like Q1 2015, they had 302 million active users, and now Q2 2016, so 5 quarters later, they're at 313. So obviously the growth has really just begun to get stagnant at Twitter. The growth in users has like put the brakes on big time. They had that huge ramp up from about 2010 to about 2014, and since then the growth has just came to almost a standstill. So this is a negative, not a super big negative, because the fact they're not declining in users. So if I was looking at this, I would say this is sure as crap not MySpace or something like that, where it's going to be out of business in anytime soon. They're obviously going to be here for the long run. Twitter is. At the same time, it's not Facebook or one of those platforms or Snapchat that's growing like insane, where they're just growing, tens of millions or hundreds of millions of users per year. So it's not Facebook, it's not MySpace, it's somewhere in between there. Next page up, we're now diving into the financials a bit. We're looking at the income statement now, and let's just take a look at, you see December 31st, 2015, then you see December 31st, 2014, then you see December 31st, 2013. So look at how much growth the revenue has gone up. So 2013, they did $664 million in revenue. And then now, last year, they did $2.2 billion in revenue. Unbelievable growth. Gross profit, great gross profit. We're just going to look at 2015 now. Great gross profit of almost 1.5 billion, 1.488. Then they had, man, look at the selling, general, and administrative number. $1.1 billion in selling, general, and administrative. What a huge number. And then that ends up making them end up having an operating loss of $450 million. Not good, not good, not good. Kind of going down here, looking at the bottom, net income, end of the day, $521 million they lost last year. That's not good. That's not good at all. Let's compare it with the other years. 2013, they lost $645 million. 2014, they lost $577 million. Last year, they lost $521 million. Basically, the losses are getting less. But they're not getting substantially less that, like, next year they're going to suddenly become profitable or anything close to profitable, at least looking at the income statement. So that's something to take into account. Let's go ahead and look at that balance sheet. Balance sheet has almost $1 billion in cash, well, a little over $900 million in cash. We're looking at 2015, by the way. 2015 we're focusing on. Short-term investments of $2.5 billion. That's fabulous. That's really good. They have a lot of goodwill in there, over $1 billion of goodwill. So basically, total assets of $6.4 billion. You see that on the total assets line. Good amount, good amount. Let's look at the liabilities now. They have accounts payable, $400 million. But we really like to focus on the debt. Long-term debt, they have $1.5 billion. They have short-term debt under current liabilities of $88 million. So basically total liabilities of around $2 billion. So their balance sheet, I would say, is good. Total stockholder equity of over $4 billion. Net tangible assets of $3 billion. That's at the very bottom there, guys, just so you know. That's a good balance sheet. It's not a great balance sheet. It's not a great balance sheet. They do have a lot of debt, but they do have a lot of cash. The cash outweighs the debt. And the short-term investments and those kinds of things, those outweigh the debt. It's an all right balance sheet, but it's not great. It's not like, oh my gosh, it's such a great balance sheet that I'm going to jump into this company. No, not really, but it's good. It's going to get the job done. Let's go ahead and look at Twitter. So we have the stock price up there. It is $18. It closed out on October 11th. We have no PE on the company, obviously, because they don't make any profit. They have a $12 billion market cap, which, you know, that's around the range I like. I like market caps in between about $1 billion and, say, $50 billion or $20 billion, somewhere around there. The smaller, the better, in my opinion. So that's in my space. Negative EPS, as we see there. 52-week range on the stock of $13 and $31. So it's toward the lower end right now. So what is Twitter? Is Twitter a buy? Would I buy Twitter? No, I would not buy Twitter. The reason being is I see potential in Twitter. Absolutely. They have a massive amount of users. They can advertise against those users. The amount of money they're getting per user is pretty pathetic right now. They also have good things going like the NFL deal. They also have good things going like a possible buyout, which, you know, if they could catch $25, $27 a share, $28 a share, you could see a huge gain in your stock, you know, portfolio in a very short amount of time if you invest in Twitter. But if that buyout doesn't happen, does the stock go back down to 14, 13, 12? That's the risk you have in it. So Twitter has a lot of potential, but it's not one for me because I don't see anything in their business changing within the next year or two. If you guys see something changing dramatically in their business within the next year or two, leave it in the comments section. Let me know what you see in Twitter, because I would love to know. You know, I'm just following the stock for like the last day and researching this stuff and whatnot. I don't see anything dramatically changing in their business, at least in the short term over the next 2 years or so. Maybe long term, but I have no clue about that. You know, how am I supposed to be confident when the users are not going up drastically? How am I supposed to be confident when they're still losing so much money? $500 million is a huge loss. So there's nothing that I can say Twitter is absolutely a buy. Do I hate the company? Do I think the company is a sell? No, absolutely not. It's just not the one for me. And I'm a hard picker. So, you know, I'm going to have a lot of stocks I'm going to cover on this channel that I would not buy. So it doesn't mean they're the worst stock in the world. This could be a huge moneymaker, especially if the buyout happens. So let me know in the comment section what you guys think. Would you buy Twitter? Are you a buyer of Twitter? Do you think Twitter is not a company to invest in at all? Do you think it's negative? What's your take on Twitter? I would love to hear it in the comment section. Also, please do not forget to comment on what stock you guys would like to see next week. And if someone's already commented that stock, make sure you comment it as well or give that person a thumbs up. That way they have better power because I'll give them more entries. Each stock that has more entries, I'll give it more tickets into the hat so it has a better chance of being the stock. Anyways, thank you so much for watching. If you guys are watching this and you haven't subscribed, you're new to the channel, you may want to do so. I talk a ton about personal finance, talk about business, and I talk about investing and investments, things like this. Today, I do this maybe every week series now called Is It a Buy, where I cover a random stock. I do the 3 stocks to own or 3 stocks I'm buying now videos, and I also do stock market terminology, so I cover a lot of stock related videos. Thank you so much for watching, guys, and have a great day.